Welcome to Dakota Gold's Richmond Hill Initial Assessment with Cash Flow Review. As a reminder, all participants are in listen-only mode and the conference is being recorded. After the presentation, there will be an opportunity to ask questions. To join the question queue, you may press star, then 1 on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star, then 0. If you're participating through the webcast, you can submit a question in writing by using the form in the lower section of the webcast frame. I would now like to turn the conference over to Dr. Robert Quartermain, Co-Chair, Director, and CEO of Dakota Gold. Please go ahead.
Thank you, Operator. Good morning, ladies and gentlemen. It is a great pleasure to welcome you to Dakota Gold's Webcast to discuss the robust financial outcomes for our SK 1300 Initial Assessment Technical Report with Cash Flow for our Richmond Hill Gold Project in Leeds, South Dakota. Joining me on our webcast today is our President and Chief Operating Officer, Jack Henris, Sean Campbell, our Chief Financial Officer, and James Berry, our Vice President, Exploration. Our news release and filing of our initial assessment demonstrates the attractive economics of a long-term gold heap leach operation at Richmond Hill, which at recent metal prices has a net present value at a 5% discount rate exceeding $2.9 billion for a measured and indicated plan. This is a very positive outcome to Dakota Gold and its shareholders. During our call today, we will make some forward-looking statements. I ask you to review our associated safe harbor disclosure on slide 2. I will make opening remarks, followed by Jack Henris, who will discuss the engineering parameters informing our initial assessment outcomes. Sean Campbell will review the financial model for the initial assessment, and James Berry will review our SK 1300 resource and our current drilling program. I will finish with concluding remarks, and then we will be happy to answer your questions. For existing shareholders and new shareholders to our story, I would like to take a few minutes to identify the resource opportunities that Dakota Gold has in the Homestake District. Over the last 5 years, we've accumulated over 48,000 acres of mineral resource tenures for our 2 key resource projects, Richmond Hill and Maitland, which are both located on private land. The Homestake District is one of the most prolific concentrated gold districts, not only in the United States, but in the world, with over 40 million ounces of gold mined from the Homestake mine along a strike extent of 2 miles. When you include Core's open pit mine, which has been operating for over 40 years, the district total is over 45 million ounces of gold produced since gold was discovered in 1876. We will focus our discussions today on the Richmond Hill Gold Project initial assessment. However, I also want to mention the positive results from our Maitland Gold Project, which is 2 miles to the east of Richmond Hill and north of the Homestake mine, where we discovered the JB and the Unionville zones, both high-grade gold underground opportunities. We're in the process of undertaking a resource assessment for the Maitland Underground Gold Project based on the 63,000 meters, or approximately 195,000 feet, drilled to date by Dakota Gold. The 2025 initial assessment highlights the potential for a technically straightforward, low capital intensity, open pit, heap leach operation with strong economics, a short payback period, and leverage to the gold price. The study was led by M3 and Respect, independent engineering firms capable of delivering through feasibility and into production for 2029. At our base case gold price of $2,350 an ounce, our measured and indicated plan has an after-tax 5% discounted net present value of $1.6 billion, while our measured, indicated, and inferred plan has a net present value discounted at 5% of $2.1 billion. The after-tax internal rate of return, or IRR, is projected at 55% and 59% respectively. With the measured and indicated plan, we will produce an average of 153,000 ounces of gold per annum over a 17-year mine life. The measured, indicated, and inferred plan, production averages 142,000 ounces of gold per annum over 28 years. Total production in the measured and indicated life of mine will be 2.6 million ounces of gold and 8.7 million ounces of silver, and 4 million ounces of gold and 12.9 million ounces of silver for the measured, indicated, and inferred plan. Capital cost is estimated at $384 million, which includes a $53 million contingency. We have a short payback period of 1.7 years for the measured and indicated plan and 1.5 years for the measured, indicated, and inferred plan. One key metric that makes Richmond Hill attractive is our low all-in sustaining costs, or ASCII. Industry average for ASCII among producers has risen over the last few years and is now at $1,634 an ounce. We know from published data from Core that the Wharf mine has a low ASCII of approximately $1,000 per ounce. We share similar geology and expected recoveries and are projecting a comparable ASCII of $1,047 per ounce for a measured and indicated plan and $1,050 per ounce for the measured, indicated, and inferred plan. This puts us in the lower quartile of operating assets and has the potential to generate future strong cash flow to fund our activities and provide capital returns to shareholders. I'm excited about the Richmond Hill project, and I would now like to introduce Jack Henris, our President and COO, to discuss the Richmond Hill engineering results in detail. Jack joined Dakota Gold on June 1st. At the start of his career, Jack worked at the Homestake mine during the period when they permitted the open pit portion of the mine. He's experienced running significant run-of-mine and crushed heap leach operations for both Newmont and Barrick. Based on his competencies, Jack has the requisite expertise to advance Richmond Hill to production. We are fortunate to have someone of Jack's caliber overseeing the next phase of Dakota Gold's growth. Jack.
Thank you for the introduction, Bob. I'm thrilled to join Dakota Gold at this pivotal moment as we transition the project to development stage. Before I present the engineering parameters for the initial assessment, I would like to commend our entire team and contractors for continuing to uphold our safety and environmental values. Last Thursday, the team celebrated a commendable milestone of reaching the 700th day of being incident-free. Slide 6 identified the external team that Dakota Gold engaged for the development of the initial assessment. M3 is the lead study manager and was responsible for the plant design. M3 has over 35 years of experience and a strong reputation for its ability to carry projects from initial study phases through feasibility. Respec is a local South Dakota company based with over 35 years of engineering and permitting experience. Respec successfully led the permitting for expansion for Core's Wharf mine located next to Richmond Hill. The expansion permitting process for Wharf was similar to our expected permitting path that requires approval from both the South Dakota Department of Agriculture and Natural Resources and Lawrence County. Welsh Hagen Associates prepared the heap leach designs, and Woods Process was responsible for the metallurgy. We have engaged environmental experts to support both the IA as well as commencing data collection for a feasibility study. Slide 7 summarizes the key parameters and outputs for the initial assessment. As Bob mentioned, the IA supports strong project economics with low capital intensity. I will discuss the foundation of the economic results, which is the proposed mine plan. For the measured and indicated plan of the 244 million ton resource at 0.463 grams per ton identified in our February initial assessment, the pit and optimization process resulted in 168 million tons of material to be included in the proposed mine plan at a grade of 0.566 grams per ton. We were happy with the result, as it was a mine plan with a grade that was 22% higher than the overall February initial assessment measured and indicated resource grade. In the measured, indicated, and inferred plan, the total tons in the mine plan is 274 million tons at a grade of 0.53 grams per ton. Pit optimizations were done using Whittle Software's Lurch-Grossman pit shells. Detailed pit designs were completed using Surpac software. Production scheduling was completed using MineSched software. We are fortunate to have the Wharf mine next door, which provides 40 years of operating history that inform design criteria for slope parameters, bench heights, and geotechnical stability. Because mineralization is at or near surface, we have low life of mine strip ratio of 0.66 for the measured and indicated plan and 0.44 for the measured, indicated, and inferred plan. Slide 8 illustrates the production and cost profile for the measured and indicated plan. The report supports a mine life of 17 years and production levels averaging 150,000 ounces of gold per year. Slide 9 presents the same information for the measured, indicated, and inferred plan. Slide 10 illustrates phases 1 and 2 of the mine plan. Under the proposed plan, we will curate mining from the north to the south and undertake concurrent reclamation to minimize our total disturbance at any given time. In the initial 2 phases, we will start mining heap leachable material in the northeast corner of the project to realize the higher grade and lower strip ratio. An overburden storage area will be backfilled and reclaimed following the completion of phases 1 and 2. Initial capital includes a starter leach pad 1, which has approximately 40% of the capacity of the final leach pad. The crushing facilities are centrally located throughout the life of mine. Like the adjacent wharf mine, we will utilize a conventional truck and shovel operation. However, we have opportunities through mine design and capital investment to generate improvements in production and cost structure. We see potential to use conveyors to feed the material onto the leach pads, which results in lower cost and better leach kinetics than loading with trucks as wharf does. Additionally, while the initial assessment was completed at 10 million tons per annum of throughput, we will evaluate higher throughput levels and resulting production profiles in our feasibility study. Moving to slide 11, we will use concurrent reclamation to reduce the disturbance footprint. We will move to the south as we mine and reclaim the overburden storage area to the north. We will backfill pits to final design parameters and approved topography, followed by revegetating and water management. Slide 12 illustrates our conceptual closure plan. We have included all costs required to conduct the reclamation work both during and after the mine operations. Turning to slide 13, the initial assessment supports an infrastructure capital cost estimate of $282 million, plus a contingency of $53 million for $335 million total. The mining equipment and pre-stripping is $49 million for an overall total of $384 million in initial capital. We consider the approximately 22% contingency to be conservative and will look for opportunities to reduce spend. Some of the factors that contributed to our lower initial CapEx are that the resource is exposed on or near surface, meaning we will have very little pre-strip at the start of the mine plan, and the project also benefits from relatively flat terrain, simple infrastructure, and limited earthworks. Moving to slide 14, we will look at the measured and indicated plan operating costs. The costs are based on a detailed annual mining and processing schedule completed using MineSched software, including variations in haulage profiles. Mining is planned to be done using 150-ton capacity haul trucks and a 29-yard hydraulic shovel with support from a 30-yard front-end loader. Mining personnel will peak at 186 employees during operation. Based on my experience operating other mines around the world, this is a very straightforward, relatively easy to execute operation with costs that are consistent with what I would have expected. Processing costs are based on a simple design process flow sheet that includes agglomeration, leach operation, general site maintenance, process labor, and 3-stage crushing. We will use a Merrill-Crowe to optimize silver recovery, which is shown to have better performance compared to an ADR, adsorption, desorption, and recovery plant when silver is significant, as is the case with this resource. Sustaining capital costs include additional heap leaches, as shown in earlier slides, and purchasing replacement equipment as required in the latter years of mining. Overall, the combination of simple mining, simple flow sheet, and a low strip ratio support an AISC of only $1,047 an ounce. Slide 15 depicts the cyanide assay to fire assay ratio test work. Test work incorporated into the initial resource included results from the metallurgical test programs, which incorporated historical bottle roll tests, historical column tests, and cyanide gold to fire assay ratios from Dakota Gold drilling to conceptualize preliminary process flow sheets and recoveries. This data was used to support the boundaries between oxide, transition, and sulfide. The green on the map shows the areas of high recoveries and oxides in transition. The results of the bottle roll and column leach test work support the conclusion that Richmond Hill material is amenable to cyanide heap leach processing. Overall recoveries are projected at 85% and 28% for gold and silver, respectively. Slide 16 summarizes the beneficial attributes of the Richmond Hill project. The close proximity of the project to local communities, existing facilities, and access to local talent make the project very attractive in comparison to other more remote opportunities. The financial benefits associated with these attributes contributed to the outcomes generated by the initial assessment. Turning to the timeline to production on slide 17, we completed our initial assessment on time and have initiated work to support our feasibility study, which is anticipated to be completed in early 2027. On the back of the data collection, we move into permitting. After the permitting process is completed, we will move into construction earmarked for fall of 2028. With this simple and straightforward mine plan, we anticipate a 15-month construction window with production starting in 2029. I'd now like to turn the presentation to Sean Campbell, our CFO, to go over the cash flow and leverage to gold price.
Thank you, Jack. I'm excited to be working on a project with such great potential. At recent gold prices, the time required to pay back the initial capital for our measured and indicated mine plan will reduce to less than 1 year, while the after-tax net present value discounted at 5% increases to $2.9 billion and results in an IRR of 99%. And while we have been focusing on the impact of gold price on the economics, I would also like to highlight that in our measured and indicated plan, almost 9 million ounces of silver is produced, and silver contributes $250 million in revenues to the life of mine plan. In our measured, indicated, and inferred plan, almost 13 million ounces of silver is produced, and silver contributes $275 million in revenues to the life of mine plan. On slide 20, you can see the measured, indicated, and inferred plan net present value discounted at 5% increases to $3.7 billion at recent gold prices, with an IRR of 107%, and again has the ability to pay back capital in less than 1 year. On slide 21, you can see that beyond net present value and IRR metrics, the IA demonstrates excellent results with respect to other key financial ratios that are important for advancing a gold project into production. The ratio of net present value to initial capital is 4.3 times for the measured and indicated plan and 5.5 times for the measured, indicated, and inferred plans. The number of times your initial capital is paid back over the mine life is over 7 times for our measured and indicated plan and over 10 times for our measured, indicated, and inferred plan. In addition, we have an initial CapEx that is comfortably under our current market capitalization, another key metric that demonstrates our company's ability to advance this project on our own. I would like to reiterate the financial support that we have for up to $300 million in financing from Orion, our major shareholder. With an initial capital estimate of $331 million plus a contingency of $53 million, we are in an excellent financial position to advance Richmond Hill. I'd now like to pass the presentation over to James Berry, VP Exploration, to walk us through the resource announced in February 2025 that has informed this initial assessment, as well as the longer-term growth potential from infill and expansion drilling currently going on at Richmond Hill.
Thank you, Sean. In February of this year, we announced an SK 1300 initial assessment report that identified a resource of 3.65 million ounces of gold and 38.1 million ounces of silver in measured and indicated mineral resources. Additionally, the report identified a heap leachable inferred mineral resource of 2.61 million ounces of gold and 22.8 million ounces of silver. The resource is informed by a historical database containing 56,734 gold assays from 902 drill holes totaling 90,447 meters of drilling and an additional 30,743 gold assays from 146 drill holes totaling 45,540 meters of drilling by Dakota Gold since 2022 to expand the resource. Slide 24 illustrates our potential step-out and infill opportunities. Dakota Gold currently has 2 drills operating at Richmond Hill, and the company expects to drill 24,384 meters, or about 80,000 feet, for the 2025 drill campaign using a combination of reverse circulation and core drilling. The core drilling is performed to collect metallurgical samples for column testing for the feasibility study and better define geometallurgical domains. After completion of the met drilling, the company intends to conduct infill and resource expansion drilling. Much of the drilling will be in the northern portion of the project area where oxide gold mineralization is similar to Ward. The reverse circulation drilling will be performed to install monitor wells to collect environmental baseline data to support permitting. I'm very happy with how the drill campaign is progressing. We reported the initial 19 drill hole assay results received from the 2025 campaign on June 18th. These holes were defined and drilled to acquire enough samples for metallurgical tests by grade, rock type, and oxidation state so that composites can be prepared for heap leach column test. The results received continue to confirm significant mineralization that has potential to be heap leachable based on anticipated metallurgical performance that was used for the most recent SK 1300 resource announced in February of this year. The grade and widths of the gold intercepts reported in our initial results continue to validate results from previous drill programs. Metallurgical drill hole RH25C 164, located in the central northern area of the project, intersected 1.94 grams per ton gold over 60 meters, of which 51.9 meters is potentially heap leachable material and consistent with previous drilling. The company will continue to report drill results through the fall as they are received. The results from the drill campaign will inform the feasibility study, which is expected in early 2027. I'll now pass the presentation back to Bob to go over our corporate structure and shareholders.
Thank you, James. On slide 27, the left-hand side shows our capital structure as of our last financial statements filed March 31st, 2025. We had 112 million shares outstanding and $47 million in cash. We have 6.8 million warrants that are currently in the money and exercisable into 2026, which would provide us with the capital that we need to fund all of our projected activities in 2025 and 2026 and taking us through our feasibility study in 2027. We have 3 analysts currently covering the company. The right-hand side of this slide shows our shareholder base. Our senior management and board has a significant equity interest in the company, and along with Orion Finance, our major shareholder, own close to 25% of Dakota Gold shares. Our institutional shareholders represent key individuals within the resource and gold investment space, and we have a large supportive retail following. In the upper right-hand side, you can see that year-to-date, Dakota Gold has outperformed spot gold and the GDXJ. In our call this morning, we have demonstrated that Richmond Hill is a robust heap leach open-pit gold project situated in an established mining camp adjacent to existing infrastructure in a state that supports mining with a clear pathway to production. Both the measured and indicated and measured, indicated, and inferred resources at recent gold prices show a robust project with more than a $2.9 billion discounted net present value. We have excellent exploration upside at Richmond Hill, and we have the potential for a multi-million-ounce high-grade underground resource on our adjacent Maitland project. We will be good stewards of the Richmond Hill and Maitland gold opportunities for the benefit of our shareholders, the town of Lead, Lawrence County, and the state of South Dakota. That concludes our formal remarks. We want to thank you all for taking the time to join us for our presentation on the significant value creation by Richmond Hill and we will now open up the presentation to questions. Operator.
Thank you. To join the question queue, you may press star, then 1 on your telephone keypad. You will hear a tone acknowledging your request. If you're using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star, then 2. If you're participating through the webcast, you can submit a question in writing by using the form in the lower section of the webcast frame. The first question comes from Andrew Mikitchuk with BMO Capital Markets. Please go ahead.
Congratulations on the next step in the first step in the engineering, next step in getting this mine towards production. Maybe if we could get some commentary on the optimization or trade-offs that will happen with this drilling campaign that's ongoing, and how this gets fed into the feasibility and changes that could put into the development plan from what was presented today, just so we have a sense of what to expect, please.
Right, well, thank you very much, Andrew. So in looking at the various trade-off studies that we'll be reviewing as we go through the feasibility study, I'm going to ask Jack to talk about that in the detail in that regard. But we're currently actually starting with the feasibility work based off this robust study we've done to date. And so, we want to be doing some additional drilling up in Chisholm Gulch. We'll expand the resource, and then we are, of course, doing the metallurgical and environmental work. But Jack, do you want to speak to maybe some of the trade-off studies from an engineering perspective that you plan on looking at?
Absolutely, Bob. Thank you. Yes. So we'll be looking at different mining rates, different processing rates. So we'll see if we can look at are there different options for currently in our plan. We crush convey. Are there different opportunities there for looking at potentially handling different grades of material types separately? So a number of trade-off studies to look at optimizing the operation as we move forward, including looking at the current equipment fleet and what we can do to reduce costs there as well. So a number of trade-offs as we go forward.
Good, Andrew?
Yep, I think that's great. We look forward to that. And then maybe just my second and last question is on the metallurgy. So the 85% average recovery, I guess higher in the oxides, a little bit higher in the oxides. How does that compare to your neighbor? I guess it's not apples to oranges. They're doing heap leach load on off versus you guys getting the long leach with the tail, or maybe just general commentary on how that looks and maybe the scale and timeline of your tail that you guys get the benefit of.
Right. Thank you, Andrew. As you point out, having a wharf adjacent to us is certainly a great template for us to look at, as they do have load on, load off. They perhaps don't have the benefit, as you pointed, of time. So again, the studies we're looking at, and based off the work we've done here, I'll let Jack speak to kind of his thoughts on the opportunities we have with having material on the pad a little longer. Jack?
Yeah, so that's a great question. I mean, initially, with the high ratio of silver to gold, we're looking at Merrill-Crowe plant, as well as crush convey and stack to improve leach kinetics, as opposed to our neighbors. They're using conventional truck stacking. The other thing that we have a fairly robust leach cycle of 120 days, as indicated in the technical report. So a number of things that we're going to do differently to see what we can do to work on improving those recoveries.
Great. Well, thank you very much for the commentary. I'll step back and let others ask questions. Congratulations.
Great. Thank you very much, Andrew. Thank you.
Now I'll pass the floor over to Sean Campbell, CFO, to take us through some questions received from the webcast audience.
All right. So thank you. The first question coming in was, you had published two plans, both the measured indicated and the measured indicated and inferred. Which one will the mine look like going forward?
You know, I've had the benefit of working on 5 projects from production from exploration to production, I should say. So one always expects that there's a conversion of inferred resources through infill drilling. You know, given the very large measured and indicated base that we have, you know, we'll be selective as we go through feasibility in the areas that we want to infill drilling, as we think the strength of the measured and indicated plan means we can defer, kind of infill drilling to once we are up in production, just because that's such a great long life of mine. So for now, we'll be focused on the measured and indicated plan, but I say over time, I expect very good conversion of inferred resources.
All right, thank you. And then just maybe combining a couple questions that we've had online with respect to Wharf being quite close, but also in general, the decision to be an owner-operator or a plan to sell the company. If you could comment on that, Bob.
Yeah, as we said during the presentation, I think we believe the best value creation for shareholders is creating and developing an operating project as a South Dakota company. You know, I've had previous experience in doing that with the Brucejack project at Pretium. However, in any instance, we have an obligation to consider any offers that are made, and there could be advantages, to accessing talent and assets, of a producing miner. So I think we'll continue to do what's in the best interest of our shareholders and stakeholders.
All right, thank you. We had a question come in online from Agentis Capital. So again, Michael Gray is the analyst of Agentis, that is one of the analysts that covers us. And their question was, what steps can DC start taking now to minimize permitting timelines once permitting officially commences?
Well, what I'll do is I'll ask Jack, as he had experienced both permitting at the Homestake mine and has our team down there to speak to. Jack, do you want to speak to the question, please?
Yeah, Bob, I will. Great question. I think the major area of focus needs to be beginning the baseline study work, which is what we're doing right now. We're doing historical, cultural work, as well as starting the groundwater work that will happen later this summer. So it's all about getting that work done sooner rather than later. And then we believe that we will file the official notice of intent with the state of South Dakota at the end of the field season of next year. So it's about getting started on the baseline work right on the heels of completing this IA, setting us up for that notice of intent at the end of the field season and giving us a healthy timeline for permitting.
Great, and I think I would, augment on that just to remind people, we're in an excellent position here with our project in an existing mining camp where individuals and the regulators are familiar with the type of operation that we're going to be doing. And because we're in private land, we have a timeline which is probably has more efficiency to it than you would see perhaps in other jurisdictions in the United States. So again, our location, existing mining opportunity on private land certainly allows us to maintain a cadence and move along a very defined pathway to our production as we've outlined.
Thank you. So we have two questions. One that we had briefly discussed, Maitland. What of a note will we hear about potential resources near term? But also, can you please briefly comment on the Maitland timeline?
Right, so with respect to Maitland, of course, it was the area that first brought us into the Homestake District. We've had excellent results coming out of our high-grade JB zone underground, as well as the Unionville zone. Currently, of course, Richmond Hill, because it has a quicker pathway to production, is where we're going to be having our focus. As I mentioned, we have over 63,000 meters drilled at Maitland, and with James Berry and his team, we're currently doing an assessment of whether we're able to come up with an inferred resource or something along those lines, which would help us target further drilling going forward on that opportunity. But that's what individuals have to realize. We have both this Richmond Hill as well as a underground opportunity adjacent to the old mine. And when you look at the west ledges of the old mine that produced some 6 million ounces, we have very similar geology, very similar grade material, and so we'll continue to assess that and advance that to the extent that we can while we keep most of our capital focused on advancing our Richmond Hill project.
The next question was, how do you plan on raising the money for the CapEx?
As we've pointed out, Orion Mine Finance is our larger shareholder. We have a $300 million financing package with them, details to work out. When you look at our capital cost of $331 million with the $50 million contingency, negotiating a package with Orion is something that will get most of the financing in place. Of course, we also now have silver as a component, and there are many royalty companies out there that like streams, so it's something that we'd be able to look at. But with our current market cap and what I consider the low capital required for this opportunity, we certainly have the capacity to be able to do it going forward.
All right. We had a question on valuation and how does Dakota Gold compare in valuation relative to its peers? And I can maybe just briefly hit on that. With the release of this report and our $1.6 billion net present value for a measured and indicated case, and over $2 billion valuation or net present value for a measured, indicated, and inferred, with our current market cap, we're trading at a little less than 0.3 times NAV. We see the potential when we look at other developers moving down that feasibility pathway to trade at a much higher share price relative to the NAV, and that's the appreciation that we're going to hopefully be able to capture as we move forward and execute.
Thank you.
Okay. Well, with that, we have run out of time. We do have a couple other questions that I will get back to you on, and you have them logged in our system. But thank you, everyone, for joining us on the conference call and webcast today. That is all the time we have for the Q&A. Our 2025 drill campaign at Richmond Hill will have assay results being released throughout the year, and we look forward to providing you with updates as we work to produce the feasibility study. Stay connected with us to receive updates directly by email on our social media channels, where we regularly post about upcoming conferences, participation, community activities, and interviews. If you have further questions for us or would like to book a meeting, please send us an email at info@dakotagoldcorp.com. Thank you, everyone, and have a safe day.
Thank you. Bye.
This concludes today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.